Good day, class. Welcome to our session. So, our session for today, we are going to talk about the introduction to management accounting. So, before anything else, no, before I need to discuss with you what is management accounting, no, I need you guys to have a good overview about management, especially for majority of you here who are business management guys, no. Tawag dito, kailangan muna nating i-connect si management kay accounting, no? That's why tawag dito, ito yung ano natin, yung parang sa Venn diagram, ito yung nasa gitna, no? Why is there management accounting in the management discipline? Okay? So, let's start. So, first we need to identify, no, the definition of business and the business owners. So, what is business? No? Business is an organization engaged in manufacturing, trading, or service activity or a combination of these activities to earn a profit. No, pwedeng combination kasi pwedeng conglomerate like San Miguel Corporation, no? Meron silang tawag dito beer, meron silang chicken, I mean poultry, meron silang holding office, no? Just like also with SM, no, they have this holding office, they have retail, they have hotels, no, they have food, they have hypermarket and etc. No, so why is there a need for a business? No, the objective of establishing a business is most likely to earn a what profit. However, as the global business environment evolves, a business is already defined as an organization sharing a vision and mission for working for a common goal. So, tawag dito, so every business no, has a vision and mission. The vision is parang iting image na nakikita in the future and the mission is the long-term goal of the company, no? Kumbaga, ano yung mission nila for the next 5 years, no? Mga ganun. Okay, so I think parang familiar naman kayo sa definition ng vision and mission and objective. So kasi I think na-discuss na ito sa inyo noong principles of management, no? And the ones who are investing capital into a business, what we call investors or business owners. No, more often than not, business owners are usually misunderstood as management. However, in its real sense, business owners are usually contributors of capital unless they are actively involved in the operations of the business. Business owners who do not want to actively participate in the operations of the business normally entrust the future of the business organization to its management. Okay guys, no, I need to highlight no the business owners or the investors is separate from the what we call management. Okay. As you can recall, no, if you have already taken your law on business organization, 'di ba? We have here the shareholders or the owners of the company, and they vote, no, for those who will be the part of the board of directors, and then the board of directors will appoint the managers of the company or the management. So nakita nyo, no, iba pa yung investor and business owner, iba pa yung board of director, at iba pa yung management. Okay, pero most likely sa mga malilit na business, sila ay isa lang, yung yung investor, no, and yung tinatawag nating management, no. Okay. So let's proceed to the definition of management. No, as we all know, no, management as the recipient of trust from the business owners should ensure that the organization operates effectively and efficiently, and the business owners will receive a favorable return from its investment. According to Peter Drucker, no, alam niyo to, management is a multi-purpose organ that manages business, managers, workers, and work. While Mary Parker Follett, on the other hand, defined management as the art of getting things done through people. So through the utilization of people, no, we mean to do business. Okay, this definition, as it may be seen, pertains to management as a process of attaining objectives through managing people. So no, parang pinaikot-ikot lang yung definition, pero kumbaga we have here the process or what we call functions, no, na i-realize lang natin, no? Kapag gumamit tayo ng people or what we call managers. Okay? So today, management is composed of four basic process. So namely, una, yung ito, planning, then organizing, leading, and controlling. So what is planning? No, planning is the process of setting goals for the organization, ensuring that the company is prepared for its day-to-day operations. Common activities under this are budgeting, cost, volume, profit analysis, and forecasting. So, yung budgeting and cost, volume, profit analysis, it will be covered in this subject. And yung forecasting, I think it will be part of your production and operations management na subject nyo. Okay, what else? Activity are part or is part of the planning phase. No, number one, setting of immediate as well as long range goals for the organization. No, dito magset tayo ng plan natin for the whole year. Pwede ring that is what we call short term or operational objective. It can be tactical objective, no, from 1 year to 5 years, no, pwedeng 1 to 3 years depending on the management, and it can strategic objective, no, it can be more than 5 years planning, no. Also included in plan is the predicting future conditions that are expected to prevail. Okay, next, considering the different means of or strategies by which the goals set may be achieved. And lastly, deciding which of the strategies should be used to attain such goals. So usually, no, kung familiar kayo sa planning na, ito yung nangyayari at the start of the year. No? Pwedeng the end of the month nung previous year, no? That is in preparation for the next activities to be performed for the next year. Okay? So, ibig sabihin, no, kung nagpa-plan na tayo for next year, let's say 2021, December pa lang doon na tayo magpa-planning. At ano yung mangyayari sa planning na yun? Doon na natin pinaplano yung mga activities na gagawin natin, yung mga goals natin, yung mga, in order to reach that goal, what are the strategies that the management will choose among the available options. Okay? So, next, we have what we call organizing. So, organizing is the process of developing an organizational structure and assigning people to ensure the accomplishment of objectives. Common activities under this are departmentalization or decentralization. Okay, so dito kasi sa organizing, no, if we have a resources of people, we need to yun na nga, organize, no? How? By assigning people to a department, or if ever there is a change in management, it can be from decentralization to centralization. It can be also from centralization to decentralization. Okay, so yun yung pag-organize, no? Lalo na kung may naset ka ng goal and you have this strategy, lalo na kung may bagong strategy and it would entail additional department, and gagawa ka ng department for that, and you will assign people, no? Possible the assigning of people would come from the current head count of the company, or or kung kulang yung tao, the company can hire additional people. Okay, after organizing, no, so we have assigned the people, there's now what we call leading. So what is leading? Leading is the process of what? Empowering an organization, including its people. So aside from the people, no, that you need to lead or supervise, also you need to lead the organization. So who will lead? These managers, yung management, kayo yun, no, future managers. Okay, common activities under this are human resource development, training, and team building activities. No, coming from planning, no, organizing, we go to leading. Dito kasi the human resource department or the HRD would come in, no, kasi bakit dito na nila kailangang iset, no, yung mga training sa mga tao na nagawa for that particular department, or the new hires na kailangan pang maggawa ng orientation kung ano yung mga responsibility nila sa company at ano yung mga expected from them to perform, no, to reach that certain kind of goal na sinet ng management in the planning phase of the planning phase. Okay, So dito rin no, team building. Si team building kasi it's a practice for every company no, para parang pine-prepare nila tong mga tao na to na once na mag-start na yung strategy or goal nila no, in reaching, I mean when they start doing activity in order to reach that goal no, kumbaga si HR kailangan nilang mag-set ng team building no, parang painitin nila yung ano nila, yung mga tao, may mga activity na to set their mind on reaching that goal. Okay? And last portion of the management process no, is what we call controlling. So controlling is the process of ensuring that the organization is performing well in reference to their chosen standard or benchmark. So common activities under this are variance analysis, performance report, and responsibility accounting. So dito may portion si management accounting no. Dito yung tinatawag nating variance analysis na makukuha natin sa what we call budgeting no. Pag punta tayo sa budgeting na yun, meron tayong mga flexible budget no. Mangyayari diyan ano yung actual expense no? Ano yung actual nakita? Iko-compare mo yung sa budget, doon magkakaroon tayo ng variance analysis. And then next we have performance report. No, meron tayong performance report actually no. Itatakal din natin to at responsibility accounting. So in general, all of these functions are performed by management to ensure that the organizational objectives, goals are met and the business owners are receiving return from their investment. No? Actually, kaya lang naman tayo nagtayo ng negosyo is what? To earn profit or yung return from the investment na nilagay ni owner. Okay, naintindihan? So next, we'll proceed now to what we call the value of information. Okay, so nowadays, no, information is very powerful. And it is a must no for the management to function well kasi pag wala silang nakuhang information no with regard to the performance or with regard to the expenses of the company no parang lost yung company. So in here management in performing its function no requires the information to ensure that business is working effectively and efficiently. Without the information, how will the management know if the company is within the budget no or beyond the budget or is in production wise or what we call productivity wise no kung okay pa ba yung measurement na yon. Okay, without information management cannot assess if the plan they have prepared worked out well, if the organizing and leading process is working effectively, and if the control process is still being implemented. Thus, information, whether financial or non-financial, is required in order to assist management in performing their basic function. So, sinabi ko kanina guys, no, kahit financial or non-financial information, no, kailangan yung mga bagay na yon, no. Aside from the information coming from accounting, no, pwede ring non-accounting or non-financial information. Let's one example is out productivity, pwedeng yung isang unit ng input, ilan ba yung nagagawa niyang output. So we are talking about the productivity. Okay, kung gaano ba siyang ka-effective and gaano ba siyang ka-efficient. In relation to the value of information, no. The information relating to financial, saan natin makukuha? Usually kay management accounting systems. Okay. So dito introduce ko na si management accounting. So, the definition here of management accounting, it is a branch of accounting that aims to identify, accumulate, analyze, interpret, and communicate various information to support management function. So, dito, no, i-highlight ko lang, no, nakita nyo, various information. So, dito, talagang importante si information in order for what to support the management function. The information would initially come from what? Source documents. So, from that source document, what are the examples first of source documents? Diba? Ito yung sales invoice, pwedeng books of account, pwedeng contract, no? If that information contains financial information, no, yun, kukunin yun ni management accounting systems or management accounting information systems. I-accumulate niya yun no, through the accounting systems and then i-analyze. No? Yung pag-analyze actually, dito napapasok si business manager. No? Tawag dito, of course, mag-generate ng report, no? and then titingnan yung report, mag-analyze si business manager, then from the analysis of information, no, mag-interpret na siya. No, ano yung masasabi niya doon sa nakuha niyang pag-analyze doon sa information. And once na makapag-interpret na siya, so maring naglatag na siya ng possible courses of action, no, ito ay i-communicate niya na sa management for decision making process. Okay? So next, we'll be talking about the main objectives of accounting. So one objective of management accounting is to make information available and understandable to management. Okay. So usually guys, yung management accounting information readily available na siya. Naka na siya, naka ready na from the system, no? Click ko lang na generate report, then nakalabas na. Okay. Pero make sure lang, no, tawag dito, no, kung si company ay kukuha ng accounting information for management purposes, no, tawag to, kailangan yung report is very very understandable to management. Kumbaga hindi siya sobrang complicated, no. Pagka-generate ng report, simple lang yung figures na makita, hindi dapat masyadong overwhelming para sa isang manager. Kung medyo kung kailangan na talagang ipakita na complicated yung information o maraming computation, of course, nandiyan naman si accounting na pwedeng lapitan ni manager in order to interpret also the or give an interpretation of the report that was generated or that is generated from the system. Okay? So next, another objective of management accounting is to assist management in performing its function. Again, information is very powerful. Kailangan ni management, no, to function is what? The information. Without the information, how would they know if the company is performing well or not? 'Di ba? If performing well, edi good, no? Ano pa tayo? Kumbaga, we focus on still achieving our goals, no? So, status ko tayo. Pero paano kung hindi na siya nagpo-perform well? So, the management needs an intervention or kailangan nila ng action in order to set their eyes on the goal. So, possible, no? Kailangan may additional effort na gawin yung management in order to perform well or to go back in track. Okay? So, the next main objective of the company is to help organization in achieving its short-term and long-term goals. Okay, ito yung nabanggit natin kanina, di ba? Nag-a-assist talaga si management accounting pagdating sa pag-achieve ng short-term and long-term goals. So, how? Through the information from the management accounting systems. Okay. Sabi ko nga kanina, diba, we have planning. So, doon nasa-set natin yung short-term and long-term goals. Okay? So, through the information that is provided or being provided by the accounting, no, ito gagamitin ni business manager in order to identify kung talaga na bang na-achieve na natin yung short-term goals natin and long-term goals. By the way guys, again, short-term goals is usually less than a year, and yung long-term goals is depending on the company, it can be more than 3 years, it can be more than 5 years. And how do we know if na-achieve din natin long-term goals? Of course, from the information coming from the management accounting information systems. Okay? So next, we proceed to the scope of management accounting. So one of the scopes of management accounting is what? Information gathering. No, dito nasabi ko nga kanina, no, si financial accounting, no, sila kasi yung magagather ng information from the documentation. Let's say for example, yung source document like official receipt, sales invoice, books of account. So doon manggagaling information, and it will go through the accounting process, and sila ay mapupunta doon sa tinatawag nating financial report. Okay? So next, yung data analysis and reporting, no. Dito na nga pumapasok yung mga financial reports. So si business manager papasok dito, siya na yung mag-a-analyze ng data coming from the financial report, and mag-interpret siya doon. So once na ma-interpret niya yung information, the business manager will create alternative courses of action, no, for a certain kunwari may nakita siyang hindi magandang performance, no, ano ba yung mga alternative course of action in order to address that kind of problem. And once na ma-prepare na to ni business manager, i-report na to doon sa management. So the next step would be the decision making. No? So si business manager nakagawa na ng alternative courses of action. So dito na siya gagawa rin ng proposal. No? Dito papasok yung decision making. So maaaring sabihin niyang we have options A, B, and C at nakita niyang mas beneficial si option C. And that recommendation will be reported to the management and the management will approve, no, the recommendation. Possible na hindi rin i-approve yung recommendation kasi baka nakita na management na better yung ibang alternative course of action based on their assessment. Okay? So, yan yung scope ni management accounting. Okay. So, now we go to the difference between management accounting and financial accounting. And we have identified 6 areas, no, na we need to discuss, no, in order to differentiate the said disciplines. So for the end user, no, sino ba yung user natin for management accounting? So for management accounting, it is what the internal users, no, usually management. It can be employee, no, mga ganun. Okay? So how about for financial accounting? It can be various stakeholders or external users such as customer, regulatory body, okay? Pwedeng investor or shareholder, okay? For the frequency, no, ganong kadalas yung need na information from management accounting? It can be what? Frequently, depending on the management needs. No, pwedeng daily, no, depende nga sa kailangan ng management. For financial accounting, no, it will be on an annual basis, no, due to the requirements of the regulatory body in relation to the rules and regulations. So how about reports, no? The reports is created based on management needs for management accounting. So it can pertain to a part or the entire company. Pwede kasi yung report, no, tawag dito department lang siya. Pwedeng division. And it is more on future oriented. For financial accounting, reports are limited to financial aspect. Okay? And it also pertains to the entire company. And it is more on historical or past-oriented information. So for the regulation, there is no regulation actually to the management accounting. Okay? It will be optional kung may mga regulation na tingin ng company ay affected si management accounting, they can comply with the regulation. While for financial accounting, it is required by various government agency and it is regulated. So usually, sino yung hindi naman usually pero ang nagre-regulate nito ay si Securities and Exchange Commission kasi doon natin sinasubmit yung financial report. So kung ano yung mga regulations na nire-release nila, kailangan sundin siya ni financial accounting. So for the types of accounting system, no, for under management accounting, it is unrestricted. No, since management report yung kailangan, no, yung makuha nating report from the management accounting information system, pwedeng unrestricted lang. No, not based on double entry bookkeeping. Kaya masaya tong management accounting kasi wala tayong journal entries. Okay, though may reports, no, makikita nyo naman yun as we go along the succeeding topics. While for financial accounting, it is very restricted. It is based on double entry bookkeeping. We need to uphold integrity in the financial reporting, no. Kailangan kasi hindi siya magalaw, no, kasi pag naggalaw possible na pwedeng magkaroon ng fraud and then magalaw yung reporting ng financials natin, lalo na kapag ipapasa natin to sa regulatory body, no, kasi kung may makitang mali ang regulatory body, no, lagot si company. Okay. For the measurements, no, the measurements used in management accounting is not limited to monetary value. It may be financial, non-financial, or statistical. While for the financial accounting, most of the transactions are in monetary value. So historical peso value. Okay? So after we differentiate the management accounting and financial accounting, now we now go to cost accounting. So yun yung tatanungin sa akin, sir, nasabi nyo related si cost, so nasaan siya? So tingnan natin si cost. So cost accounting, the linkage between financial and management accounting. Kumbaga sa Venn diagram, no, meron tayong isang bilog for financial accounting and meron tayong isang bilog for management accounting. So as you can remember, no, in cost accounting, no, the cost pertains to a resource given up or to be given up to attain specific objective. Usually, costs are driven by various activities within an organization or what we call the cost driver. O, di ba? Familiar kayo kay cost driver. So, accounting, on the other hand, is simply defined as the language of business because it identifies, analyzes, interprets, and communicates business information to various users. So, talagang ang language natin sa business is only what? Accounting. Dito kasi natin nalalaman kung kumikita ba ang negosyo or hindi. So, combining these two definitions together, the cost and the accounting, no, cost accounting is a branch of accounting that deals with the process of identifying, analyzing, interpreting, and communicating cost information to various users. So, 'di ba kanina meron tayong differentiation ni financial and management accounting. Ang kanilang linkage is what is the cost accounting. So, si financial accounting may cost, same goes for management accounting may cost. Gagamitin kasi yung cost information na to doon kay financial accounting for future-oriented information or report, no? Na kailangan for decision making. So doon yung link ni management and financial accounting. Okay. So next, we go to the cost accounting and various users of. Cost information has various uses depending on the objectives of the users. Generally, information stakeholder can be classified as external and internal. Now, as to the internal users of cost information, now we have here managers. At different levels are the most common internal users of cost information. As defined in our basic management courses, managers are tasked to perform the process of planning, leading, organizing, and controlling tasks in order to achieve the company's objectives. And due to this, managers are expected to use cost information in order to plan and control business operations. So, nakikita nyo yung connect, no, ni cost accounting. Kailangan si cost, no? For what? In order to plan and control business operations. Okay, for the external users of cost information, there are various external users of cost information such as investors, employees, governments, and other parties. Take note that the primary characteristics common to all external users is that they have limited access to information. As such, they only rely on published reports regarding cost information. However, kindly take note that these stakeholders have various objectives in dealing with cost information. Just like with internal users, no, kailangan din ng external users yung cost information. Pero si external users, mas limited lang yung kanyang information relating to cost. Whereas with internal users, no, yung kalit-liitang cost ng bawat product, pwedeng coming from the direct material of the product, direct labor, and overhead, no, magagamit yon ni internal users. No, may ganung visibility sila pagdating sa cost information. Both financial and management accounting pertains to accumulation of information and communicating this information to its various users and most common source of their information, which is cost accounting. So next, we'll talk about the accountants in organization. So guys, kailangan ko lang kasi ma-highlight to, no, para at least alam nyo kung ano yung silbi ni accountant sa organization. So note that accountants assist management in performing its various function. As such, accountants may be strategically positioned in various departments to obtain a more vivid understanding of the entity's operations. The position of accountants, although deployed in various departments, are still considered a staff function and not a line function. Staff function supports the organization, although not directly involved in its front operations. Line positions are those directly dealing with customers, that is the front operations. So in here, no, the accountants can be positioned in the controllership and treasurership. So what is the difference between those two? First, I need to tackle controllership. So controllership is a science of control, which is the process by which management assures itself that the resources acquired are used effectively and efficiently. Specifically, the controller, no, the head of the controllership has the following but not limited to functions. So number one, yung planning for control being the controller, no. Next is financial reporting, no. Dito pumapasok si financial accounting. Next, management audit. So the audit of the financials. Then next, tax administration, no, yung pagmamanage ng pag-file and pay ng tax. And next, government reporting, yung pagsubmit ng financial report sa mga regulatory bodies. Then next, economic appraisal. So yung pagsubmit natin ng financial report, it will form part of the GDP, no, yung sa economics natin. Okay, next, treasurership, no? Kumbaga si controllership, siya yung maintain ng records ng company, no? Pwedeng sila rin yung nagko-control, no, ng cost, no? While treasurership is more on the custody of what? Cash, no? Not only cash, pwedeng cash and cash equivalent, mga tipong ganon. So what is treasurership? Treasurership is a science of management of funds or finances. So dito pumapasok si financial managers. Okay? Specifically, the treasurer has the following function. So, number one, no, provision of capital. Okay? Sila yung nagpo-provide nung capital for different purposes like funding in operations, in financing, no? Mga tipong ganon. Okay, next, investor relation. So, sila yung nakikipag-usap sa mga investor natin, no? Hindi si controllership. The next, short-term financing. If need ni company ng short-term financing, sila yung makikiusap sa mga bangko. So next, banking and custody of funds. So ito yung sinasabi ko, ito yung number one function ni treasurership. No, sila yung in charge of custody of the fund or yung paghawak ng pera. Next, the management of investments. And lastly, the insurance. If there are portions of the company that needs to be insured, no, meaning to say i-manage yung risk, no, pwede silang kumuha ng insurance from different insurance provider or insurance companies. In a traditional environment, no, the controller is normally the chief financial officer of the company, no, lalo na kung maliliit na company. However, as the organization evolves, no, the the chief financial officer is already different in the controller, as it occupies a seat in the top management capable of making financial decisions. Okay? So next, I'll be talking about the professional ethics in management accounting. So specifically, pagdating kay management accountant. So in here, in performing the functions of the management accounting, no, the following ethical standards must be observed by all the accountants, no, regardless of the subject matter. Number one, the integrity. No, integrity talks about avoid being associated with incorrect, incomplete, or misleading statements or pwedeng inaccurate information. Okay, so yon. So number two, objectivity. It means being fair, honest, and free from conflict of interest. Disclose all information relevant to decision making. So dito kailangan free of conflict of interest ka, wala kang financial interest, wala kang personal interest sa business, no. You need to be objective. You are looking for the welfare of the company, no. Hindi pansariling interest yung tinitingnan mo. Okay, next. Meron tayong tinatawag na competence and due care. So the accountant, no, should strive to improve his knowledge and skills to ensure that the client receive a competent service. Due care encompasses compliance with technical and professional standards through examination and on a timely basis. So kailangan laging umattend ng ng continuing professional development or CPD, no, pwedeng trainings, no, in order to update him or herself, no, doon sa bago sa practices sa management accounting. So next, ito yung importante rin, no, confidentiality. Lalo na ngayon meron tayong Data Privacy Act. So in here, confidentiality talks about the consultant not disclosing or using for his own personal advantage any information acquired in the course of professional relationship. No, unless required by law. So there should be any evidence from the court, or there's any infringement coming from the court, or duty to disclose, no, due to quality review, self-protection, and compliance with ethics. No, this standard extends to social environment, prospective client, each staff, and expert use, as well as after business relationship. Okay, so kahit wala na tayo sa business, no, kahit nga resign na, dapat nga hindi tayo divulge ng information. We need to protect the information that we know about the company. Okay? For the professional behavior, this refrain from actions that will discredit the profession of the accounting. A consultant must not make exaggerated claims and comparisons. So when we say professional behavior, at least, no, tawag dito, hindi tayo gagawa or may involve sa mga gawaing illegal, mga tipong ganun. And of course, that would discredit to the profession. Okay? So, I would like also to discuss ano bang certification na makuha natin in management accounting. No? Ito yung tinatawag nating CMA, or Certified Management Accountant. So, the certification body here is the Institute of Management Accountants that is based on Australia. So, kung naisip nyo kumuha ng certification related kay management accounting after taking this course, so pwede naman. Actually, you can ask me if you want. No? Hindi pa ako CMA, pero I am planning in the future. Pero if you are interested, I can give you an information about the CMA. Okay? So guys, I'll be giving a 10-minute break. No? Pwede kayo mag-CR break, kumain, and magpahinga, no, kung napagod kayo sa unang discussion natin. And magpo-proceed na tayo sa overview of cost accounting. Okay? Hello class, welcome back. So we now go to the overview of cost accounting. So cost accounting is a very important portion of management accounting, because some of the concepts coming from cost accounting will still be very relevant or relatable to management accounting. Later, we will be having a discussion of some of the classifications of cost that will still be used in the upcoming sessions that we will be having in this subject. Okay, first off, so what is cost? So cost is the monetary measure of the amount of resources given up or used for some purpose. It can also be that cost is the monetary value of goods and services expended to obtain current and future benefits. And it can also be the expenses which require cash outlay. Okay? When we say resources given up, it can be cash. So meaning to say, the bills and coins that we are currently have. And when we say also cash equivalent, it can be that non-cash assets be exchanged for the desired goods or services. For example, it may be possible to trade equipment for materials used in production, meaning to say, if we have plans of buying any equipment, we can exchange non-cash assets. Can also be that if we have readily available cash, we can exchange it for the equipment that we intend to buy. Apparently, if you have any plans of buying or purchasing equipment, we want to have that what we call future benefit. In a profit-making firm, future benefits usually means revenue. Remember, that is our purpose in doing business. We need to gain profit, right? As costs are used up in the production of revenues, they are said to expire. And these expired costs are called expenses. So guys, remember that cost and expense are different animals. So when we say expense, it is the expired cost. Okay? And these expired costs, no, these are expenses that are deducted from revenue on the income statement in order to determine the profit for the period. And of course, guys, there is another term what we call loss. So loss is a cost that expires without producing any revenue benefit. So it's another animal. So when we say expense, it's a expired cost that provide benefit or revenue to the company. While loss is a cost that expired without giving you any revenue or benefit. Okay, some of you will ask, sir, are there any costs that do not expire? There is. That is what we call asset. And asset includes many types of accounts. It can be equipment, and for in the context of management accounting, it would be more applicable if you use the term, the account inventory. Okay, because most of the time, we will be talking about income statement and what accounts we usually see. Uh, of course, there is revenue, expense, cost of goods sold, and one asset. One um, asset account that you would normally see in that statement is what? Inventory. Okay, now let's proceed to the next slide. So here are the common cost terms used in management accounting. So first off, we'll be talking about cost object. So cost object is anything for which cost is computed. It may be a product, it may be a product line, it may be a segment or a department, it may also be a project. Okay? So anything where we compute cost. In case of a job order, remember in job order, we accumulate cost by jobs. While process costing, we accumulate cost by department. If you remember job order and process costing. Okay, most of you will uh, encounter this term, cost object, because in management accounting, the cost object that you would probably or would normally encounter is for product, for a product line, and it can be also on a department. Okay? Next, we discuss about cost driver. So, cost driver is any variable such as level of activity or volume that usually affects cost over a period. An example of this is production, sales, and number of hours. So in here, the cost driver cost changes in resource usage, activity usage, cost, and revenue. Okay, so cost driver is anything that apparently that drives the cost of the object. Let's say for example, we want to know the driver of the electricity cost. One thing that you can relate to it is what? The kilowatt hour usage or the kilowatt hour consumption of the company on a monthly basis. Another example would be your salary expense wherein you have these assemble workers or assembly workers who are paid on an hourly basis. So what is your cost driver for the salary of the assembly worker? That would probably be the direct labor hours consumed. Okay? Another example of cost driver is the commission expense. What do you think is the cost driver of commission expense? Probably, most of the commissions are based on revenue or sales. Okay? For another term, what we call cost pool. So, cost pool is a grouping of individual cost items, an account in which a variety of similar costs are accumulated. So you are very familiar with this, no? Examples are work in process, factory overhead control. Another would be your finished goods inventory. It can also be raw materials inventory. So it's more on accounts that are used to pool cost. So if you incurred costs in manufacturing plant, of course the expectation is what? The manufacturing cost would be pulled in the work in process account. And if the goods are already manufactured, the cost pool will now be transferred to your finished goods inventory, provided that it is not yet sold. And once the products, no, the finished goods are sold, it will now be transferred now to your cost of goods sold. All right? Okay, next, activity. Activity is an event, action, transaction, task, or unit of work with a specified purpose. So in here, you need to be very particular if your activity is a value-adding activity or a non-value-adding activity. For value-adding activities, these are activities that are related to the manufacture of your goods or services. While for those that are non-value-adding activities, these are activities that are not in any way related to manufacturing your goods. An example of value-adding activities might be assembling, painting, and mixing. So based from the words, these are very familiar words to you, that most of these activities are usually encountered in manufacturing activities. While moving materials, setting up machines, these are not related in any manufacturing activities. In here, the finished goods have been set aside after the production was done. So that activity here would now be your non-value adding activity. Just like also with setting up the machine, since it is not related in any way to producing your goods or manufacturing your goods, it's also part of your non-value adding activity. So now I guess the terms cost object, cost driver, cost pool, and activity are now familiar with you. Remember, these are the important cost terms that are very, very common that you will hear or used in management accounting. After this slide, we'll now talk about the classifications of cost. So we have different classifications of cost. So first off, we'll be talking about the as to nature of cost. So we have two. One is manufacturing cost. So these are costs that incurred in relation to the manufacturing process or the production of a certain product. Okay. While for non-manufacturing costs, these are what we also call commercial expenses. These are operating expenses of the business normally classified as your marketing, selling, and administrative expenses. So what are the examples of costs that would fall under manufacturing cost? Okay, these are what? Your direct labor, direct material, and overhead costs. So any costs that are related to the manufacturing operations or activity of the company. While for those that are not related to the manufacturing, an example would be marketing expense. So what are your marketing expense? Can be your promotional expense, advertising expense, right? While for your selling expense, an example of this is what? Commission expense. And for administrative expenses, an example of this are what? The salary of your accountant, the salary of your executive officers, your management, the salary of your purchasing officer. Okay? And it can also be, example would be your utilities expense like electricity, water, light. Okay? Okay, now we go to as to timing of recognition of expenses. And we have two. One is product cost and another is period cost. For the product cost, these are costs included as part of the inventory, which is initially classified as an asset in your statement of financial position. But when this inventory are sold or is sold, it will be transferred now to an expense account or what we call cost of good sold. Okay? For the period cost, these are costs that are automatically charged to current operations regardless whether the benefit would be in the current period or would be experienced in the next period. Whereas in product cost, if the inventory is still not sold within the year, it would still remain in your statement of financial position as an asset account. If the inventory is already sold, the cost related to that inventory will now be transferred to an expense account, what we call cost of goods sold. Okay? So next, we need to discuss the elements of our product cost. So there are three elements of product cost. One is what we call your direct material. So direct materials are traceable, materials traceable to the goods or services being produced. For example, we are manufacturing a table. So what do you think parts of the table would be directly attributable to your direct material? Of course, it would be the wood, okay? It can also be the nail, and it can also be your lacquer, okay? So that cost or that materials that you see or you can trace would form part of your direct material cost. While for direct labor, these are labor that are traceable to the goods or services being produced, or in other words, these are the labor costs or salary of workers that are directly um, related to the manufacture of the good. Okay? For example, these are costs related to the salaries paid to the assembly worker. Okay? And next element of product cost is what we call overhead costs. These are product costs other than direct material or direct labor. So meaning to say other than direct material and direct labor, as we mentioned earlier. What are the examples of overhead cost? One is factory supplies, factory rent, factory depreciation, salary of faculty supervisor, manager, and insurance on factory. In other words, these are expenses on the plant or factory. Sir, how about the supplies in the office? Would it be included in your overhead cost? No. This office supplies, once it is consumed, it will be now office supplies expense. How about, sir, the salary of accounting? Would it be under overhead cost? The answer is no. No? The salary of accounting would be what? Part of the administrative expenses and not part of the overhead cost. Okay? Now, in relation to our elements of product cost, I need to discuss this with you. Okay. When we say direct material and then we add direct labor cost, that is what we call prime cost. Okay? Now, for the conversion cost, this is the sum of what we call direct labor cost and overhead cost. So, sir, why is direct material and direct labor cost called prime cost? These are the costs primarily related to manufacturing the product. How about, sir, conversion cost? Now, these are the costs that are related in converting the material, the raw material, into a finished good. So what are these costs? These are direct labor and overhead cost. In no way that your prime cost and your conversion cost is your manufacturing cost. It can be that your prime cost plus your conversion cost minus your direct labor cost would be your manufacturing cost. Okay? Okay, now we go to the next classification of cost, what we call controllable cost and non-controllable cost. Now we are talking about as to controllability. Okay. Controllable costs apparently are costs that can be modified by a certain individual in an organization. From the word itself, controllable cost, it can be controlled. Okay? Or controlled. Okay? Now, for the non-controllable costs, these are costs that cannot be controlled or modified by a certain individual in an organization. Example of controllable costs would be your direct materials, direct labor, and certain factory overhead costs that can be controlled by your production manager. Example also would be your sales manager that has a control over the salary and commission of sales personnel. For the non-controllable cost, the example of this would be your um, depreciation, insurance, repairs and maintenance, and rent expense and utilities expense, because these costs are not in way that can be influenced or controlled by the production manager. Okay, that is in the perspective of the production. Okay, and now we go to as to the association with cost object. So we have two. One is direct cost and another is what we call indirect cost. So for the direct cost, these are costs that can be easily traced to a certain cost object. So when we say easily traced, no, this can be economically and effectively be traced. Okay? For the indirect cost, these are costs that cannot be easily traced to a certain cost object. So cost assignment is done by allocating the indirect cost to the related cost object. So in other words, indirect cost, no, these are direct costs like direct material and direct labor. While for the indirect cost, these are usually your factory overhead cost. Okay, so how can we assign cost or indirect cost to the product or in overhead? By cost assignment, meaning we uh, allocate cost to the related cost object or product cost. Okay, next we go to as to management discretion. So there are two types of cost. One is committed cost and another one is your discretionary cost. Committed costs are costs that a company is already bound to incur for a certain period. These are long-term in nature and cannot be eliminated even for a short period of time without affecting the profitability or long-term goals of the firm. So usually the example here is the depreciation of your building and equipment. These are already committed. Okay? So for the discretionary cost, no, this usually are costs that a company can still opt not to incur. This usually arise from periodic, it may be annual or monthly, and by it usually arises from periodic decisions by management to spend in certain fixed cost area such as research, advertising, maintenance contracts. Discretionary costs may be changed by management from period to period or even during within the period if circumstances demand such change. So the example for this cost are research and development cost, advertising expense, I think maintenance cost. Okay. Next, we have as to importance in decision making process. So we have three slides here. So guys, remember these are the costs that you will usually hear when we talk about management accounting. So first is your relevant cost. These are costs not incurred by the company and are differential between two alternatives. So in here, there should be at least three conditions present. So any of these conditions, if available, would deem the cost as relevant. So first condition would be the cost should be future, or the cost should be incurred on a future date. Okay. The next is that cost is what? Controllable. Okay. And another, between two alternatives of action or course of action, they are different. So we will be having another discussion about relevant costing on our week 10. Okay? So for the irrelevant costs, these are costs incurred by the company or costs that are not differential between two alternatives. So meaning between two um, alternative course of action, the incurrence of a certain cost, they are both at the same alternative. So meaning to say these are irrelevant for decision making. Okay, next, differential cost. These are costs that differ between two alternatives at hand. So, sir, it might seem that relevant cost and differential costs are the same. The answer is, uh, at some point, they are similar, but relevant cost is more on the general sense. And while differential cost is only a part of the relevant cost. As I've mentioned earlier, in relevant cost, there are three conditions that that should be present, or at least one of them should be present to say that is a cost that is relevant. One is it must be incurred in a future date. Second, it should be different between two alternative courses of action. And the last one is it should be controllable. Okay? Okay, next. So there is sunk cost. Sunk costs are already incurred, or that is historical cost. So sunk cost is what? An irrelevant cost. For decision making, since you have already incurred the cost, would that cost be relevant to your decision making? The answer is no. Okay? Since you have already incurred that, it is not anymore relevant to your decision making. Okay? Avoidable costs are the costs that the company can save if another alternative has been chosen over another. So when you have two alternative course of action, and when you chose the option A, okay, you will incur cost. But when you chose another alternative course of action, that is option B, you will see that you can save cost. So that cost saving will be your avoidable cost. While for the unavoidable costs, these are costs that the company will continue to incur regardless of the alternative course of action taken. Okay? So meaning to say, between the two alternative course of action, the cost is indifferent, so it is still an avoidable cost. Okay? So next will be your opportunity cost. So opportunity costs are cost of income that was not earned because another alternative has been chosen. So in here, there are another two alternative course of action. It is more on realizing on how much should you be gaining or earning if you only chose that alternative course of action. An example would be, let's put it in a very pragmatic way or practical way. Okay? So you have a scheduled exam by tomorrow, 9 a.m. And it happens that you also have this opportunity that your classmate has given you a ticket going to Paris also at 9 a.m. Okay. So here's the dilemma. You have two options. Of course, one is, of course, if you want to pass the exam, you want to choose option A. And you have given up another option, that is B, to go to the Paris. So the opportunity cost there would be going to Paris. Okay? And for if you choose uh, option B, no, of course, you have this you have this chance to go to Paris. However, when you chose this option B, no, the opportunity cost will be your chance of uh, getting a pass mark in that exam. No? Okay? Okay, next. Out of pocket cost. So these are costs that require cash outlay at the onset of incurrence. An example of out-of-pocket expense would be, for example, you have a budget of spending this amount on a certain activity for a month. However, your actual expense has already exceeded the budgeted amount. So when that happens, and if you need money that is out of budget, that is what we call out of pocket cost. Okay? And now we go to the as to the behavior of cost. So we have three. One is the variable cost. Next is fixed cost, and the last one is mixed cost. So when we say variable cost, these are costs that vary directly in total in relation to the cost driver that must be within the relevant range. It means to say that in total, it varies directly, but in variable cost per unit, it inconstant. Okay? While fixed cost, these costs that remain constant in total in relation to the cost driver that is within the relevant range. However, on a per unit basis, it varies. Okay? Do you guys get the difference between the variable and the fixed cost? Okay? For the mixed cost, no, this cost possess both the characteristics of a variable and a fixed cost. In cost accounting, as I recall, no, you were given the task of separating the fixed cost and the variable cost through the use of different methods like high-low method, okay, regression analysis, no, scatter graph diagram. In our next meeting, we will be tackling that separating of variable cost and fixed cost from the mixed cost. Okay. Okay, now we go to the cost behavior assumption. So we have three. One is a relevant range assumption. So in here, the range of activity within which the cost behavior patterns are valid. If the activity goes beyond the range of activity, the cost behavior patterns would not now be valid. Meaning to say, we need to compute for another unit cost based on the cost behavior pattern outside that range of activity. Now, for the time assumption, no, the cost behavior patterns identified are true only over a specified period of time. Okay? And the last one, we'll talk about linearity assumption. So the cost is assumed to manifest a linear relationship over a relevant range despite its tendency to show otherwise over the long run. Okay, meaning to say within the short period, with the short term, the relationship between the cost and activity is in a linear relationship. And if you get a historical graph within the last 10 years, the relationship would not be any more linear. Okay? Due to some factors like increasing prices again, no? Due to inflation or decreasing prices due to deflation. Okay? A class, welcome back to our session. So our last discussion, we tackled about the different cost concept in cost accounting. So now we need to apply the cost concept to the problems that I will be presenting to you later on. No, but before anything else, we need to review again what are the components or what are the accounts that are under the income statement and the cost of goods sold. We need to be familiar with these terms in the statements so that we can appropriately solve or accurately solve the problems relating to cost concepts. Okay, so here is my whiteboard. No, this is my first time presenting to you. No, my penmanship. Okay, okay. Again, I need to discuss with you what are the accounts that is included or that are included in the income statement. So first off, no, we are talking about what we call income statement. Under the income statement, first line item is what? Your sales. Okay? And then now we deduct what we call cost of goods sold. And when we deduct COGS or cost of goods sold from sales, we get now your what we call gross profit, or in other books, income. Okay. We now deduct what we call your operating expenses from your gross profit or gross income in order to get what we call now the net profit or net income. Okay? So here are the items that might be asked in the problems for Stracoman. No, it may be possible that you need to get your gross profit, or it's asking about your net profit. It can be squeezing other line items like asking for your operating expenses, your COGS, and your sales. So you're working backwards. Okay. So I need to highlight here another component of the income statement that needs to be computed. So what are the accounts that you will need in order for you to get the cost of goods sold? Okay? Okay, now we have a blank whiteboard. So now guys, it's again a review of your cost accounting because I am now going to present to you the statement of cost of goods sold. Okay. Guys, your first line item here would be your what? Raw materials beginning, right? And now we add the acquisition or your purchases of your raw materials during the period. Okay. Then after we add the raw materials beginning and purchases, we now have your raw materials available for use. Okay. And then we now deduct your raw materials ending from your raw materials available for use in order for us to come up with your direct materials. Okay, guys, what again is your direct material? The direct material is the cost of the raw materials used in relation to the uh, manufacture of your product. Okay. Now we add your direct labor or the cost of or what we call the salary that is paid to the assembly workers or any labor that is related to the manufacture or I mean to the manufacture of your product. And then we add now your manufacturing overhead or what we call also factory overhead. So these are your indirect material, indirect labor costs, or other or costs other than DM and TL. No, it includes again your for example rent expense, depreciation expense, salary of your supervisors and managers. No, that is related to the factory operations. Okay, when you add the three, no, this is what we call your TMC, TPC, and your TFC. So what do we mean by TMC again? Total manufacturing cost. For your TPC, it's total production cost, and for your TFC, it's what? The Filipino channel. Ay, mali. Nako, nagjo-joke si sir. It's total factory cost. Okay? Do you remember, guys? Okay. So again, a review. Your direct material and direct labor is what we call your prime cost, right? And your direct labor plus your manufacturing overhead or factory overhead is what we call your conversion cost. Sorry, nag-automatic siya. Conversion cost yan. Okay? Then we bring forward the balance from the TMC, TPC, or TFC. Okay? So I need to rewrite this again. Okay? So with the so for the TMC, TFC, TPC, we will now add your BWIP, or what we call beginning work in process inventory, in order for us to get what we call TGPIP, or what we call your total goods put into process. Okay. Then we deduct now your EWIP, or your what we call ending work in process inventory. And when we deduct EW from TGPIP, we now get what we call COGM, or cost of goods manufactured, or in other books, it's the cost of your completed goods. Okay. Then we now add what we call your BFG, or your beginning finished goods, in order for us to get what we call TGAS, or total goods available for sale. And then we now deduct what we call your EFG, or your ending finished goods inventory, from your TIGAS, in order for us to get what we call now your eto, COGS. Okay? So dapat ito yung pinakababa. Kasi ito nga yung statement of cost of goods sold. So ano yung mga line item or accounts that is related to COGS, no? Ang dami nila, no? Okay? So, hindi ko na kailangang i-discuss kasi yung entry nito, no? Wala naman na tong bearing. Pero you need to be familiar with this kasi baka may mga tanong, no? In relation to getting some of the items here, no? You need to work backwards, or squeeze it in, or squeeze it. Okay? So, it may be possible that you will be asked, for example, the missing line item is your direct material, no? So, you need to work backwards from COGS, no? If the given item is COGS, and some of the items will be missing, of course, no, you need to work it backwards in order to get the uh, direct material. It can be at the beginning of the statement. It may be the problem may ask you about what is the balance of your raw materials beginning. So there. Okay. So are we clear on the statements of cost of goods sold? So if there are any questions, so please reserve it, and I can um, answer it after the end of the session. Okay? Okay, so for our first problem, the accounting records of Tacoma Company revealed the following cost. So here we have your direct materials used amounting to $170,000. Your direct labor is $350,000. Your manufacturing overhead is $400,000. And your selling and administrative expense is $220,000. So we're now looking for the Tacoma's product cost in total. Okay guys, do you remember how to get the total product cost, or the total production cost, total manufacturing cost, and your total factory cost? You need to get your what? Direct material, your direct labor, and your factory overhead, or manufacturing overhead. Okay, do we have here any direct material? So we have, right? It's here, your 170,000. So let's add your 170,000 pesos. And then do we have any direct labor? We have, it's here. How much? 350,000. And then we have your manufacturing overhead amounting to 400,000. So what is the total? It's raised to 1, 900 $20. So here is your product cost. Okay, so the answer here is what? Letter C. Okay, you have any question? Okay, as to the administrative expense, no, it's not part of your product cost. Your administrative expense is what? It's your period cost. Okay, so now let's proceed to the next question. Okay, for our next problem, we'll be having again the another cost concept. Now we're looking now for the period cost. Okay, so in here, the accounting records of Hill Corporation reveal the following selected costs. So we have your sales commission worth $40,000 and your plant supervision amounting to $94,000 and your administrative expense amounting to $185,000. So we're now looking for your period cost. Okay. A while ago, guys, we are getting the product cost. Again, the composition of your product cost, it's your direct material, direct labor, and manufacturing overhead or your factory overhead. Now we're looking for the period cost. No? What do we mean by period cost? These are the cost incurred during the period that is not attributable to your product cost, or these are not inventoriable cost. It is directly expense outright. Okay? So what do we mean by your period cost? What are the example transactions that would fall under period cost? So any transactions with expense relating to your administrative, marketing, selling. Okay? So in here, let's review. So first, we identify the transactions. Okay, the sales commission in here. So is sales commission part of your period cost? The answer is yes. Okay. Remember, this is a selling activity. So any expense related to selling activity would be included in your period cost. So let me write here sales commission. Your sales commission amounted to $40,000. How about plant supervision amounting to $94,000? Will we include it in the period cost? The answer is no. Why? Your plant supervision is a product cost. Okay. When we say supervision, it means the salary paid to your plant supervisor. So any activity related to plant or factory would form part of your your product cost, not period cost. So your plant supervision here is not included in the period cost. So how about the administrative expense worth $185,000? Is it included? Will be included in the period cost? The answer is yes. So remember, your period cost again includes your administrative, marketing, and selling. So this is explicitly described as administrative expense. So this is automatically what? A period cost. So let me write here. Let me write it in here. Okay. Okay. That is $185,000. So your total in here amounted to $225,000. So the answer here is letter D. So here is your period cost. Okay? Okay, now we go to the next problem. Okay, next problem. Norwood Appliance produces washers and dryers in an assembly line process. Labor costs include or incurred during a recent period were corporate executives worth $100,000, assembly line workers worth $80,000, security guards worth $18,000, and plant supervisor worth $30,000. The total of Norwood's direct labor cost was, okay, let's examine each expenses related to labor cost. What the problem is looking for is the direct labor cost. So first, is corporate executive a labor cost or direct labor cost? Okay, the answer is no. The salary of corporate executives will be what? Your period cost. And since period cost is not a product cost, so apparently it is not a direct labor cost. Okay, next. How about assembly line workers? So your assembly line workers here, no, has a salary of $80,000. So remember your assembly line workers, these are your staff who is who is directly related to the production of the product or manufacture of the product. Okay. So the question here is your salary for the assembly line workers a direct labor cost? The answer is yes. Okay. Next, how about for the security guards? Is the salary for security guards amounting to 18,000 part of your direct labor cost or is a direct labor cost? The answer is no. Your security guards here are not the direct workers in manufacturing the product. Regardless whether they are placed in the manufacture or not, they are not part of the direct labor. Okay, if they are part of the production, then the the payment for security guards would be included in your factory overhead, not in the direct labor. And if the security guards is not placed in the production or plant, rather in the administrative building, it will be a what? Period cost. Okay. How about for the salary relating to plant supervisor? Is it a direct labor cost? The answer is no. The salary of plant supervisor, though they are in the plant, no, but they are not directly related or not direct workers who manufacture the product. Their salary will be in factory overhead or manufacturing overhead. Okay. So the answer here is letter A. Okay. Okay, next problem. The accounting records of Westcott Company reveal the following costs. So we have here factory supplies or factory utilities amounting to $35,000. We have wages of assembly line personnel amounting to $170,000. Customer entertainment amounting to $45,000. Indirect materials used amounting to $19,000. Depreciation on salesperson's car amounting to $51,000 and production equipment rental cost amounting to $100,000. So the question here is that the cost that would be considered in the calculation of manufacturing overhead total is what? Okay, the question here or what the problem is looking for is the total manufacturing overhead cost. So let's discuss each line item. Okay. So first line item, we'll talk about your factory utility. So here, this is the utilities used for the production. A manufacturing overhead cost, the answer is yes. Okay. Okay. Answer is yes. Okay. How about for wages of assembly line personnel? The answer is no. Your wages of assembly line personnel, again, these are the salaries paid for your assembly line personnel who are directly related or the ones who are direct workers in manufacturing the product. So this is what? Your direct labor cost. Okay. How about for customer entertainment? Is it a manufacturing overhead? The answer is no. So your customer entertainment is what? A period cost. Okay? Okay. Remember that manufacturing overhead cost is what? A product cost. Since customer entertainment is a period cost, no? Apparently, it's not a manufacturing overhead cost. No. It can be a what? Marketing expense or administrative expense depending on the treatment of the company. Okay? Next, for the indirect materials used, no, worth 19,000, is it a manufacturing overhead cost? The answer is yes. Okay, your indirect materials used, these are not directly traceable to the product, but it may form part of the product. Okay, so this is what a manufacturing overhead cost, just like with the factory utilities. Okay, next, how about depreciation on salesperson's cars? Okay, is it a manufacturing overhead cost? The answer is no. Your depreciation here relates to the cars, right? But relating to the salesperson. So it's a activity that is pertaining to selling. So it's a period cost. Okay, what if the depreciation pertains to the factory's cars? Would it form part of your manufacturing overhead? The answer is yes. Okay, it's another case. Okay, how about for the production equipment rental cost? Will it form part of your manufacturing overhead cost? The answer is yes. It's a rental relating to the production or factory. Hence, it will form part of your manufacturing overhead. So the answer here is we add 35,000, we add 19,000, that is 54,000, and then we add 110,000, that is 164,000. So the answer here is letter A. Okay, next problem. Port Walton Industries began July with a finished goods inventory of $48,000. The finished goods inventory at the end of July was $41,000, and the cost of goods sold during the month was $125,000. The cost of goods manufacturing during July was, okay, in here guys, we are looking for the COGM. Okay, so how do we get the COGM? Remember, we have here your BFG. And then we add your cog M. And then we deduct your EFG in order for us to get what we call your cogs, right? Now what we're looking for is what? It's your cog M. So we're now solving the problems backward. Or we need to squeeze the amounts in order for us to get the cog M. So do we have any BFG? Yes, we have the BFG, or what we call beginning finished goods here, okay, amounting to $48,000. So we leave the cog M line as blank, no? That's what we're looking for. Then next we are looking for the ending finished goods. The ending finished goods here is what? It's your $41,000. Okay? And do we have any cogs? The cogs here amounted to $125,000. So we put it in here. So just work backwards, no? We are getting the cog M. So that's cogs, okay? And then we add your EFG and we deduct your BFG. And the answer here is what? It's $118,000. Okay? If you want to check, um, we can um, we can double check. Okay, so your BFG is $48,000, your COGM is $118,000, and then we deduct your EFG $41,000. So it should give you an answer of COGS amounting to 125,000. Otherwise, if it will not give you $125, the answer for our COGM is already incorrect. Okay, next question. Kansas Plating Company reported a cost of goods manufactured of $260,000, with the firm's year-end balance sheet revealing work in process and finished goods of $35,000 and $67,000 respectively. If supplemental information disclosed raw materials used in production of $40,000, direct labor of $70,000, and manufacturing overhead of $120,000, the company's beginning work in process must have been. Okay, guys, I'll be giving you a minute before we proceed. Okay, so guys, we're looking for the BWIP or the beginning work in process inventory. Okay, so what are the you think the line item that is very relevant to BWIP? Okay, so we have here your okay work in process end and finished goods ending amounting to 67,000 and your COG M. Okay. Okay, we also have here your raw materials used in production or what we call direct material, your direct labor and manufacturing overhead. So we need to get here the total manufacturing cost or your total factory cost or your total production cost. And at the same time, we need to get your uh, total goods put into process working backwards, okay, in order for us to get the final requirement of the problem. The item that we're looking for here is the BWIP. So first, let's start with getting the total production cost, total manufacturing overhead, or the total factory cost. So so we have here your um, direct material amounting to $40,000. And then we have your direct labor here amounting to $70,000. And we have your manufacturing overhead amounting to $120. And when we add the three, we get now your total factory cost, total production cost, or your total manufacturing cost amounting to this is $230,000. Okay? Okay, but we're not yet done because we're looking for the BWIP. No? The TMC that we've calculated will be essential in order for us to get your BWIP. So if we work forward in getting the TMC, in getting the TGPIP, we need to work backwards. Okay? So in here, we're looking for your TGPIP. And unfortunately, that's the missing item also. So when we for the TGPIP, we need to deduct what? Your EWIP, right? Okay? In order for us to get the COG-M. Okay, do you have any COG-M? Yes, we have. It's here, $260,000. Do you have any EWIP? Yes, we have EWIP here amounting to $35,000. So we work backwards or we squeeze. We now get your TGPIP amounting to how much? So how do we get the TGPIP? COG-M, okay? Okay, I'll put a negative sign on EWIP because in order for us to get a COG-M, we need to deduct EWIP from TGPIP. And since we are getting TGPIP, we work backwards. Um, how do we compute your COG-M? And then if we're going to get a if we're going to transpose it, no, the 35,000 here would be added to your COG-M of 260,000 in order to get the TGPIP of how much? $295,000. Okay. Okay. So what are the essential information here in order for us to get the BWIP? The TFC and the TGPIP. Okay, remember, in getting your BWIP here, um, di ba we have a statement of cost of goods sold wherein the TFC, TPC, or TMC is what? Added to our BWIP. And when we add the BWIP to the said account, we now get the TGPIP. Right? So, can we put the BWIP here? Yes, we can put the BWIP here. Okay. That's the missing item. Okay. And when we add the BWIP to the TPC, we get your TGPIP. Okay. And since we already got the amount for TGPIP were 295,000, we can now get your BWIP. Okay. So in order for us to get the deduct the TFC, amounting to how much? It's $65,000. So the answer here is letter C. Okay? Okay, next problem. The accounting records of Bronco Company reveal the following information. So we have here your raw materials used or direct material amounting to $60,000, direct labor of $125,000, manufacturing overhead of $360,000, work in process inventory 11 or the beginning balance of $50,000, finished goods inventory 11 or the beginning amount $189,000, the work in process inventory 1231 or the ending or what we call EWIP amounting to $76,000, and your finished goods inventory 1231 or your EFG amounting to $140,000. So we're looking here for the cost of goods manufactured or your COGM. Okay, in other books, it's cost of goods completed. So in this problem, it seems it will be a straightforward one. Okay, so let's start with your materials or your raw materials used amounting to $60,000. Okay, then we add your direct labor amounting to $125,000. And then we have your manufacturing overhead amounting to $360,000. So the total here is $545,000. Are we done or not? Oh, this is only your total manufacturing cost, your total factory cost, or your total production cost. We are looking for the COGM, right? Okay, how do we get the COGM? Okay, we bring forward this item, okay, your TMC, amounting to $545,000. So after we get the TMC, we add now your BWIP. How much is your BWIP here? It's $50,000. And when we add, it gives you what? The total goods put into process. And then we now deduct the EWIP amounting to $76,000. And it will give you the COGM, or the cost of goods manufactured or completed, amounting to $519,000. So the answer here is letter A. Okay? Next problem. The accounting records of Dolphin Company revealed the following information. Your total manufacturing cost amounted to $530,000. E-WIP amounting to $56,000. Your E-WIP amounting to $78,000. Your BFG amounting to $146,000. And your EFG amounting to $123,000. So we're now looking for your COGS, or your cost of goods sold. So here the problem is also straightforward. You don't need to work backwards. So let's start with your TMC. How much is your TMC? It's $530,000. And then we add your BWIP. How much is your BWIP? $56,000. That will give you how much? $586,000. So we call this one as your TGPIP. And then we deduct your EWIP amounting to how much? $78,000. Okay? Deduct. Okay? That gives you what? $508. Okay? So this is what we call COGM. Are we done? No, it's only COGM. Okay? Okay, we now bring forward this line item. Okay, your COGM amounted to $508,000. Okay, and then do we have any BFG? Yes, we have BFG amounting to 146,000. Okay, that will give you an amount of 654. Yeah, 654,000, and that is what? It's your TGAS, or your total goods available for sale. And then we deduct your EFG amounting to $123,000. So it will give you an amount of 135 $531,000. So here is your COGS. That is letter C. Okay. Okay, let's proceed to another problem. Legio Industries reported the following data for the year just ended. Your sales revenue amounted to $950,000, cost of goods sold amounting to $420,000, and your cost of goods manufactured amounting to $330,000, and selling and administrative expense amounting to $170,000. So we're looking for Legio's gross margin, or profit. Okay, how do we get the gross profit? Okay, remember, in your net income statement, in order for us to get the gross profit or margin, we deduct your cost of goods sold from sales revenue. So here, your sales revenue amounted to $950,000. And then we deduct your COGS, okay, amounting to $420,000. And that will give you an amount of $530. Okay, the answer here is what? Letter D. Okay, guys, your COGS is different from your COGM. Okay, your cost of goods sold pertains to the cost of your sold products, while for the cost of goods manufactured, it's the cost of your completed goods that are not yet sold. Okay? Okay, guys, that ends our illustration problems for the cost concepts. Okay, if you have any questions, please um, give me a ping, or you can unmute your mic and please introduce yourself and state your question. Okay?